most powerful currency in history was never defeated in war. It was challenged by numbers, by debt, by trust, by time, and today, the warning signs are no longer hidden. In 1944, the dollar became the center of the world. Every major currency was tied to it, and the dollar itself was tied to gold. For the first time, global finance had a single anchor. In 1971, that anchor was removed. The United States ended gold convertibility. The dollar became pure fiat. Many believed this would end its dominance. It didn't. The dollar survived for one reason. There was no alternative. America controlled trade, capital markets, and military power. Trust did not disappear. It relocated. After the 1973 oil crisis, a new deal was made. Oil would be sold in dollars. Security would be guaranteed by America. Energy created demand. Demand protected the dollar. Every nation needed oil. Every nation needed dollars. This allowed the United States to run deficits no empire before it could sustain. Debt grew. Confidence remained. For a time, year after year, spending exceeded income. Trade imbalances widened. Borrowing replaced production. The system functioned, but it weakened beneath the surface. Banks collapsed. Markets froze. Trust evaporated. The world saw how fragile the system had become. Trillions were created overnight. Liquidity replaced discipline. The crisis was postponed, not resolved. Debt became permanent. From this moment forward, countries began asking a dangerous question. What happens if the dollar system fails? And that question changed everything. For decades, the dollar was trusted because it was neutral, but that neutrality ended. Sanctions turned money into a weapon, and once money becomes a weapon, trust never returns the same way. When countries saw reserves being frozen, they understood a hard truth. Your money is not truly yours if someone else controls the system. That realization spread quietly, but permanently. Trust is the foundation of any currency. Once trust cracks, power slowly leaks away. Not in headlines, not overnight, but steadily. Nations began asking new questions. Why hold reserves that can be frozen? Why trade only in one currency? Alternatives were no longer theoretical. They became strategic. China and Russia moved first. Energy trades shifted. Local currencies replaced dollars. The change was gradual, but deliberate. BRICS was no longer symbolic. New members joined. New systems were discussed. For the first time, a serious alternative began forming. Bilateral trade agreements increased. Currencies bypassed the dollar entirely, small at first, then frequent. Momentum began to build. Technology accelerated the shift. Digital payment systems reduced reliance on traditional banking rails. Money moved faster and outside old controls. Central bank digital currencies entered the conversation. Governments saw opportunity. Citizens saw risk. The future of money was becoming programmable. This was no longer theory. The system was changing in real time. Slowly, quietly, but irreversibly. While the world was shifting, America's debt was exploding. Trillions were borrowed. Interest kept rising. The foundation began to shake. Money was printed to solve every crisis. Short-term relief, long-term damage. Confidence slowly eroded. Inflation reached ordinary people. Food, fuel, rent. The cost of living exposed the weakness of the system. Foreign holders noticed the pressure. Returns fell. Risk increased. Confidence began slipping globally. Gold quietly returned. Central banks bought record amounts. A signal older than history itself. Reserves were diversified. Less dollar. More assets. Risk was being redistributed. Energy deals changed direction. Oil was no longer priced, only in dollars. A pillar cracked. Financial power depends on dependence. As dependence declined, leverage faded. Influence followed. The world moved toward balance. Multiple centers, multiple currencies, no single ruler. This was not collapse. It was transition. The dollar wasn't dying. It was losing its throne. Governments explored digital currencies. Control increased. Tracking became easier. Money entered a new era. Central bank digital currencies rewrote financial rules. Speed replaced privacy. Efficiency replaced freedom. Physical cash began fading. Convenience won. Anonymity lost. A silent trade-off. Transactions became data. Data became power. Money now watched its owners. Some turned to crypto, not for profit, for independence. A digital rebellion. But crypto was unstable. High risk, high reward. Fear slowed adoption. The financial system adjusted. Regulations tightened. Gatekeepers returned. Control reasserted itself. There was no perfect solution. Not gold, not crypto, not fiat. Only trade-offs. The future became fragmented. Multiple systems, multiple risks. Choice replaced certainty. Money never truly disappears. It transforms. Those who understand it early survive the transition.